We're going to review the freeandclear.com interest-only mortgage calculator, which is a mortgage calculator that allows you to determine your initial monthly payment, potential future payments, and total interest expense over the life of the loan for an interest-only mortgage. The Free and Clear interest-only mortgage calculator also enables you to review potential scenarios, including the worst-case scenario for an interest-only mortgage. To find the interest-only mortgage calculator, simply click on the Mortgage Calculator tab on the top left of any page on freeandclear.com, and that will take you to a page that lists all of the calculators available on Free and Clear. The interest-only mortgage calculator is located under Mortgage Program Calculators, and if you click on the triangle to the right of the calculator title, it reveals a brief description of the calculator. I'm going to click on the calculator title, and that'll take us to the calculator page. I'm going to briefly review an interest-only mortgage before I walk through the calculator step by step. Interest-only mortgages have an initial interest-only period, typically for the first 3, 5, 7, or 10 years of the mortgage, when the borrower pays only interest and no principal at a fixed interest rate. Following the interest-only period, the mortgage converts into an annual adjustable rate mortgage when the interest rate can change every year for the remainder of the term of the mortgage. This is known as the adjustable rate period. These mortgages are called 3-1, 5-1, 7-1, and 10-1 interest-only ARMs, or IO ARMs for short. So in the case of a 7-1 interest-only ARM, the borrower pays only interest at a fixed interest rate for the first 7 years of the mortgage, and then pays both principal and interest for the remaining 23 years of the mortgage at an interest rate that is subject to change, typically on an annual basis. The mortgage payment during the interest-only period is typically less than the mortgage payment for a loan, such as a fixed rate mortgage or an adjustable rate mortgage, when the borrower is paying both interest and principal. The interest rate for the adjustable rate period, which follows the interest-only period, is called the fully indexed rate and is calculated by adding the margin, which is fixed over the life of the loan, to the index, which is an underlying interest rate that can change. This means that the fully indexed interest rate and your monthly mortgage payment can change and potentially go up over the life of the mortgage. Because it is impossible to predict future interest rates, we do not know exactly what the payments for an interest-only mortgage will be after the interest-only period, but we can review multiple scenarios to understand potential outcomes. I'm going to walk through the calculator now. As you can see from the way the page is laid out, the inputs to the calculator are on the left side of the page, and the outputs to the calculator are on the right side of the page. The inputs are the information that you provide or select, and the outputs are provided by the calculator after you click the calculate button. It's important to highlight that if you ever have a question about an input, simply hover your cursor over the icon to the left of any input rectangle, and it reveals a brief description of the input and information required. The first input is mortgage amount, and I'm going to use $300,000 in this example. The next input is mortgage term, or the length of the mortgage in years. I'm going to select 30 years in this example because that is the most common term for an interest-only mortgage. The next input is the interest-only period, or the length of the initial period for an interest-only mortgage during which the borrower pays only interest and no principal, and the interest rate is fixed. The interest-only period is typically 3, 5, 7, or 10 years. If you click on the drop-down menu, it shows a range of options, and I'm going to select 7 years in this example. So our mortgage is a 7-1 interest-only ARM. The next input is interest-only period interest rate. This is the interest rate you pay during the initial period of your mortgage, which is 7 years in this example. So the starting interest rate for your loan. If you hover your cursor over the icon to the left of the drop-down menu, it shows the current interest-only interest rate for a 7-1 interest-only ARM. In this case, the interest rate is approximately 3.375%. If you click on the drop-down menu, it reveals a range of options, and I'm going to select 3.375%. The next input is adjustment period. This determines how frequently our interest rate will adjust during the adjustable rate period of the mortgage, so after the fixed rate period. If you click on the drop-down menu, it shows two options, annual or semi-annual. And I'm going to select annual because that is the most common adjustment period for an interest-only ARM. So the interest rate for our mortgage can change every year. The next input is an interest-only ARM index. This is the underlying interest rate that is one of two components of the fully indexed rate, and this rate can change over the life of the mortgage. Lenders typically use the 1-year LIBOR or 1-year Treasury note for the index. I'm going to select 1-year Treasury note. The next input is the current rate for the index you have selected. If you hover your cursor over the icon to the left of the input rectangle, it shows the current rates for the 1-year LIBOR and 1-year Treasury note. The current 1-year LIBOR is 0.590% and the current 1-year Treasury note is 0.110%. We have selected the 1-year Treasury note in the previous input, so I'm going to use 0.110. The next input is the interest-only ARM margin, which is a fixed rate over the life of the loan that is added to the index to determine the fully indexed rate, which is our interest rate during the adjustable rate period of the loan. I'm going to select 2.250 in this example. The next input is the initial adjustment cap, which is a cap that limits the change in interest rate for the initial adjustment period following the interest-only period. So in this case, year 8 of our mortgage. The initial adjustment cap varies depending on the length of the interest-only period, and I'm going to select 5% in this example. The next input is the subsequent adjustment cap, which is the cap that limits the change in the fully indexed rate in any adjustment period following the initial adjustment period. So years 9 through 30 in this example. I'm going to open the drop-down menu and select 2%. Our final input is life cap, which is a cap that limits the maximum increase in interest rate over the term of the mortgage. I'm going to select 7% in this case. So because we selected 3.375 for our initial interest rate, the maximum interest rate for our mortgage over the life of the loan is 10.375. We have submitted all of our inputs. I'm going to click on the calculate button, which will produce our outputs. The first output shows the estimated monthly mortgage payment during the interest-only period. So this will be our mortgage payment for the first 7 years of the loan when we're paying only interest and no principal. The next set of outputs shows the current fully indexed rate scenario. In this scenario, we use the current fully indexed interest rate, or 2.36%, as our interest rate throughout the adjustable rate period, so for the final 23 years of the mortgage. Although it is highly unlikely that the interest rate does not change over the adjustable rate period, this scenario gives us a sense of what our interest-only mortgage could look like in the future. First, we show the current fully indexed rate based on our inputs, and then we show the estimated monthly mortgage payment using the current fully indexed rate. As you can see, even though the interest rate goes down as compared to the interest-only period interest rate, our mortgage payment goes up because now we are paying both principal and interest and not only interest. We also show total interest expense over the life of the mortgage, including both the initial interest-only period and the adjustable rate period using the current fully indexed rate. The next scenario is the worst-case scenario, which shows what our mortgage would be like if the interest rate reached its maximum level as soon as possible. Again, this is a highly unlikely scenario, but it prepares you for the unfortunate situation if interest rates increase significantly and rapidly. The first output in this scenario shows the maximum interest rate at the first adjustment period, which is 8.375% in this case. The next output shows the estimated monthly mortgage payment based on this interest rate. So you can see a significant increase in our monthly payment as compared to both the interest-only period and the current fully indexed rate scenario, which is because our interest rate has gone up significantly. The next output shows the maximum interest rate over the life of the mortgage, which is 10.38% in this example. And the following output shows the first month when this maximum interest rate could potentially apply, or month 97 in this example, which is at the beginning of year 9 of our mortgage. The next output is the estimated monthly mortgage payment based on this maximum interest rate. As you can see, this payment is higher than even the estimated mortgage payment at the first rate adjustment. The final output is total interest expense over the life of the mortgage, including both the initial interest-only period and the adjustable rate period, assuming the interest rate increases as much as possible as quickly as possible. As you can see, this amount of interest is significantly higher than the amount of interest in our current fully indexed rate scenario. It's important to highlight that you can change the calculator inputs without having to refresh the page. So if I change our interest-only interest rate from 3.375 to 5% and click the calculate button, our outputs update automatically without having to refresh the page. After you've reviewed the calculator scenarios that apply to you, you can click on the Compare Lenders button at the bottom of the outputs and review a table with interest rates and fees for lenders in your area. If you're interested in an interest-only loan, you can click Loan Type on the left side of the page and select ARM-IO. In this case, I'm going to select a 7-year interest-only ARM, and the table updates automatically. If you have any questions about the free and clear interest-only mortgage calculator or any mortgage topic, you can always click on the Ask an Expert button at the top of any page, and it will take you to the free and clear Ask a Mortgage Expert feature, where you can submit your question. The feature is free to use, and we never spam. We also encourage you to check out our detailed discussion of interest-only mortgages in our mortgage program section and interest-only mortgage acceleration in our free and clear mortgage acceleration section. Thank you for reviewing the free and clear interest-only mortgage calculator.